Welcome to PitchIt, the Fintech Startups Podcast. One founder, one startup, one investor at a time. I'm your host, Todd Anderson, Chief Content Officer, Fintech Nexus. Thanks again for tuning in to this week's episode of PitchIt. I sat down with Able's co-founder and head of Able, Diego Represas. Commercial lenders use Able to quickly collect information from borrowers, streamline the loan process, and book loans faster. The commercial lending process overall is still very much document-driven. While those documents might have moved from paper to digital, the overall market is still using this process, which was developed quite some time ago. Able is helping to change that equation by streamlining the lending process. By using Able, lenders can cut down on mistakes. They can cut down on repetitive asks, like asking someone for the same or similar documents 100 times. And they can save time on the overall process and increase that time to yes. Diego and I talk about Able's technology, how AI is used to automate aspects of commercial lending, the impact Able can have on the bottom line, Diego's time in the Army, raising capital, and much, much more. Before you begin the episode, please take a minute to rate the show and provide feedback. I always take listener comments very seriously. And don't forget to join us in Miami on December 13th and 14th for Fintech Nexus LATAM's premier Fintech event. Without further ado, I present Able's co-founder and head of Able, Diego Represas. I hope you enjoy our conversation. Welcome to the podcast, Diego. How are you?
I'm doing just fine, Todd. Thank you for having me.
Of course. So I'd like to kick off the interview. If you could tell us a little bit about yourself, your background, and a little bit about your professional journey before starting Able.
Yeah, for sure. So my name is Diego Represas. I am originally from Mexico City in Mexico. I came to the US via a boarding school actually at age 14, and then ended up going into this kind of a windy career in between the Army and then the world of kind of like technology and in particular computer science after going to Stanford for college. After that, I did a few years at a personal finance company that later became more of a neobank called PitchIt, recently sold into Opportune, and spent four years at PitchIt where I led everything that was related to AI. I was essentially their head of data science in that regard, and then I afterwards started Able with Andrew, who was also at PitchIt, and he led security and infrastructure there. So I think that's kind of like the brief version about myself. Obviously, we could go more, but we can start it from that point.
Now, did you always view yourself as someone that eventually would start a company, or with your time at PitchIt, talking to Andrew and kind of seeing a problem, you kind of fell into it or decided to go that direction, or was it a pathway that you were kind of always getting to?
Yeah, I mean that's a great point. So I'll tell you really what drove it. So I grew up in somewhat of a very complacent environment when I was in Mexico. I grew up like surrounded by people who just really didn't want to change the course of the status quo too much. And Mexico is a country of extreme differences, if you will, not necessarily poverty, but differences in wealth and everything. And that always kind of drove me a little bit nuts, seeing how many businesses were being built on the back of poor folks. So I always thought that I would one day create something big. And we have a notion today of what it means to be a startup founder, but that wasn't there yet, right? But I would create something big and beneficial to the world, and I would disrupt actually all these like incumbent players who were just taking advantage of people, right? And I think that just stayed with me a long time. And it was probably in high school and in military school where it took the shape of in the form of starting a company. So, military school, I went to a high school that was actually a military academy. It's called Valley Forge in some Pennsylvania. And it's a very weird place to go to for high school. It's a very different high school experience. And what was interesting about this high school is that it was entirely cadet run. So what I mean by that is like, kids your age, between the ages of like 13 to 17, were in charge of you completely. And they had a level of control over you that
Interesting.
would be unheard of nowadays. Yeah, and so I think that when I saw what would happen if you had the right leadership in there versus if you didn't, and what could happen if you had really inspiring figures or not, like I became a person who said like, what I want to do is build and grow an organization, right? And I think a tech company is just one way to build and grow an organization, and there's reasons specifically why I like that and why I picked that. But that was, age 14 was really the genesis of like, we're going to start something like this.
Tell us about the company, Abel. Exactly what you guys do. What's your target customer? Tell us a little bit more about what you're building.
Yeah, for sure. So today, what Able does is it solves probably what is the most pernicious problem, an expensive problem, really, within commercial lending. And when I use commercial lending, I mean lending to businesses, like how the Fed would say it, which is the collection and management and organization of the various pieces of documentation required to complete a loan, right? And so this process is, we're focused right now on lending, but you could kind of perceive that this process is very similar in any other financial transaction that requires the underwriting of a different party that is somewhat complex, right, and requires a lot of documentation. Mm-hmm. So that's what the company solves. In terms of our current target customers, so we really go for anywhere from community, mid-size, and large banks and other financial institutions that look like that. I think we are not limited to traditional financial institutions, but there's just like a limited pool of fintechs and the like that are engaged in this type of financial transaction, right? So just out of consequence of that, we tend to focus heavily on banks, right? And so right now we're primarily focused in the US. No particular reason why the platform has to be limited in the US, but that's just an incidental of starting in this market.
In terms of the back to the core piece of what you guys do and the documents, what are some of the key issues, if I'm a lender, if I'm a bank, that come up when dealing with all these documents? Is it the documents for each company are different, the information that each company has on itself is different, and getting to a point of standardization and full scope of what a company does to understand how much to lend them at what terms takes a really, really long time? I mean, what are some of the key issues that you guys solve with your product?
Yeah, I mean, that's a great point. This is hard to address without kind of like addressing the more fundamental issues that the documents are just like one blocker to a more fundamental issue, right? But the more fundamental issues are, today, if I am a business owner and I want to apply for a meaningful loan, it's going to take somewhere between 1 to 6 months for me to get funded, right? Yep. I think you can do a lot faster than that. If you pursue a smaller unsecured loan, perhaps something that is named after yourself, but anything other than that, it's going to be a long process. And then you have to ask yourself, well, why is this process so long, and why is it so arduous? And it's often not just long, but it's very duplicative, right? It's like people doing the same work over and over. Like maybe you submit like 5 different applications. You shouldn't really have to do all of that. And it's duplicative, it is long, it is error prone, and there's also a lot of work required and part of the company founders, the leadership, everybody who's involved in it, right? And so the document portion is just one. It's the biggest, but it's just one slice of this whole thing of like, why does it take this long to do? And I think that if you would have asked me the same question 50 years ago, I would have been like, hey, 6 months is great. A month is great, but the economy has changed, consumer expectations have changed, right? Like The relationship with money is now different. Getting funded in 3 months is probably not a good experience nowadays. And you hear it because customers or borrowers nowadays really they describe their experience of applying for a loan from a bank as like what we've heard are things like, hey, it's like essentially a prostate exam on my business, this is open heart surgery, this is pulling teeth, right? So if people are saying things like that, it's just probably not meant to stay there, right? And so the documents are just one portion of it. And so then you have to ask yourself, like, well, why are there all these documents? Like, what first is like, why is there all this documentation? And then the second thing is like, well, why is all this documentation such a pain to deal with, right? And so to address a part, generally, the documentation is created as a source of risk mitigation. So generally, the more cheap the capital you can get for your particular risk profile, the more documentation it'll involve, right? Yeah. Because it's a closer magnifying glass, right? If you didn't want any documentation, you'd probably go for a kind of like a, friends and family funding, right? That's going to be very expensive and very risky relative to the interest rate of a loan, right? So that's generally where it comes from. And so I think like what you have seen is like a lot of kind of like very neat onboarding journeys that have happened in the world where all this documentation is not needed, which tends to be smaller loans, tends to be more on the retail and consumer side rather than the commercial side. But now what you're seeing is like, hey, when the loans get larger and you still want to be able to get accessible pools of money, it's going to involve this documentation. And the documentation's really of all kinds. Is like it's incredible what you find in there. It's like everything from like you always hear financial statements, right? Like that's kind of like stuff that you always hear, but like you don't hear of like proofs of insurance, like certain attestations that certain people are involved or not involved in an entity, right? It's like legal documents of all kinds and flavors.
It disincentivizes the company to like want to go for that, as you described it, substantial loan, and it kind of incentivizes them in some way to go for these other options, whether it's smaller amounts, more unsecured, because they need the capital in a quick way to make decisions quickly for the business.
You've got it spot on. And that's like just like objectively a bad thing for the borrower, right? But it's hard. It's hard to tell an entrepreneur who's like working 12 hours a day that then now kind of like have to put an extra haul to go apply for one of these like low cost loans, right? And so yeah, you're totally right. Instead, they pursue the high cost options out there that are quite frankly not the best for them. So yeah, you're totally right on that. I'm glad you pointed it out.
In terms of the technology, using Able, does it help in terms of not only the documentation and kind of organization and standardization, but how much, if I'm a lender, can I cut out? Say if I was normally doing loans at 4 months, does it now become 2 months if I implement what you guys provide? And does that allow me to get to more yeses more quickly and serve more customers?
Yeah, that's a great point. So I think like individual results vary according to the type of loan and the type of organization and everything, right? But let's consider kind of like a sample loan, right? Like a typical commercial real estate transaction, like that could go well into like 100 days in order to close, right? So from a transaction like that, like what we expect to shave is around a couple of weeks, right? In terms of kind of like their time. And then more than just that, like I think that something like real estate, you can't shrink that time fully because there's certain processes that are not in control of the lender or in control of the borrower that or the entity borrowing that are involved in there. But what matters most is like, what can you do in order to get to a time to yes, right? Like what can you do in order to just tell the borrower, hey, here's your general terms, and from that you can do a much more significant impact. And if you get to faster times to yeses and you get to more yeses, what you end up having is this very neat effect. So if you look at an originations process. It's really kind of like a funnel, if you will, where you start with many people applying and then you go towards the back, right? And so as a lender, you actually want to be incentivized to find the right people as quickly as possible, so that most of your staff is working on deals that are going to make it all the way through, because that's the most efficient, right? So there's a lot to be gained when it comes to just general efficiency if you are working on the deals that you're going to say that you can very quickly say yes to, and the borrower very quickly says yes to, and now everybody's focused on opportunities really that are going to transpire well and that are not going to end up in sour feelings on either side, right? So I think there's also a lot to be gained there, but primarily where we make most of our wins is just sheer hours of labor that somebody in the bank has to have in organizing or preparing or modifying this documentation, right? So we're very big assistants to those roles within the financial institution that currently have to spend a lot of time asking and requesting information, making checklists about what's required and what isn't, chasing down after customers or third parties to get this documentation, and then finally organizing this and onboarding it into the appropriate systems, which, believe it or not, sounds simple, but is actually a huge pain that we end up solving. That's like where a lot of our AI investments go into.
That brings me to my next question, which is, the last couple of years, there's obviously been a lot of upheaval. There's been COVID. But what we've heard during that period of time is this huge push to digitize. Then we had PPP and getting loans to small businesses as quickly as possible. But when thinking to the customer that you serve, these banks, has that much really changed? And if it has, does that then help the commercial lending process long term and kind of coming down in terms of average time? Or from what I understand, a lot of the issues were solved during the pandemic through people essentially thrown at the problem, and that the technology wasn't as updated as it maybe appeared, and that there were more bodies at the time. And now that there's less bodies, in some cases, it kind of is going back to this normal 1 to 6 month range that we've been kind of stuck on here.
Yeah. So I mean, this is just one person's opinion, right? But this based on my own observations on the field. But we should treat COVID as an accelerant to a trend that was already occurring. And PPP as part of the whole COVID umbrella. And the trends that we have been observing are the right ones, but they're insufficient ones. So what do I mean by that? So, years ago, perhaps 20 years ago, if you walked into a bank, the modus operandi, the default way of doing stuff was literally with physical paperwork. Yep. And that's still somewhere out there, right? But today, you have kind of like moved all this physical paperwork into digital systems, right? And I think that if you go into the average one of our customers, like each one of our customers is going to be using a suite of hopefully cloud-enabled applications that allows them to do their work, right? This transition is very similar to in the 90s when the average enterprise adopted the ERP and other systems of record, right? And brought, now they're in the cloud instead because the cloud is here, right? Yeah. It's a very similar transition. You essentially grab all the things that were physical, you now digitize them. And by digitize them, you gain all kinds of benefits, such as like visibility. You gain all kinds of benefits, such as kind of like accurate reporting. You gain just some collaboration benefits associated with it, et cetera, right? But the customer themselves, they haven't been fully digitized, right? And so the customers are like maybe now are submitting paperwork. It's just that instead of like literally mailing it in, that most customers are like going into some like Dropbox or some portal where they're like uploading stuff, and that's in the good case, right? In the majority of the case, they're just submitting stuff via email, right? And what ends up happening is that like, yeah, good stuff. We have these big systems of record. And by the way, this has been a great transition. And most banks have really gotten their stuff together on it, and they're using the kind of like state of the art in this regard, right? But what hasn't been solved is just the amount of manual work that needs to be done by both the underwriting and lending parties, right? The financial institution, as well as the customers. It's just the same work. It's just moved from a paper base to a digital base, right? And so really kind of like where things need to go now is to actually get rid of this barrier of work that needs to get done, that obviously increases the cost of capital, but also dissuades people from completing processes or from completing a transaction, really, and moving that out of the way. And I think like you have seen a lot of that in the consumer side, right? Like today, if I go apply for a mortgage, it's like actually like somewhat of a refined customer journey. In many cases, not all yet, but like it's getting there, right? And certainly if I apply for a like let's consider another one, right? If I apply for a personal loan through kind of like something that is a retail based loan, like that's going to be a very streamlined experience. But that's just not the case in the business and commercial side yet, and that's what needs to happen. And it's getting its way there, but it's slow as molasses, as you can probably expect.
Can the commercial lending process ultimately, say in 5 or 10 years, could it be automated, and should it be automated?
Yeah, that's a great question. I use a particular framework to think about this, right? And that framework looks as follows. Let's look at other products of similar value and how they are distributed and sold and onboarded to a customer that are not financial products, right? So let's look at just SaaS. I know SaaS because, you know, we're a SaaS company. So can selling SaaS and distributing SaaS be completely automated? And can you skip the salesperson? Can you skip the whole manual process and everything? So the answer is it depends, right? It's like for smaller ticket loans, for smaller ticket products, always the case, right? But as the lifetime value of the customer starts growing, there becomes kind of like an imperative to not really do that, right? And actually have kind of like more of a manual process, either because it introduces excessive risk, or because there's more risk involved, there's more like potential to win involved in everything. And so you kind of like take those things away. So I think like a very similar thing is going to happen overall in the lending space. Like you're going to end up having a pool of loans that are very automated and just kind of like occur in a totally no touch capacity. Then you're going to have your pool of like transactions and loans that are going to be in the low touch space, and then you're going to have a pool that are going to be in the high touch space, right? And there's just reasons why they should or they have to be in there. And I think a lot of people, as a computer scientist, you're always kind of like a programmer, you're always inclined to say, oh yeah, we can definitely automate it, right? So a lot of this belongs to the territory of like, yeah, you could automate it, but actually you will lose money if you automate it. So you probably don't want to. And that's kind of like the biggest thing.
What's the biggest lesson that you've learned since launching Able about your business?
Oh man, this is
or
tough.
one of the
I don't
lessons.
think I have. Yeah, I don't think I have like reflected on this enough. Like we're just in the day to day, but give me a few seconds to think about that.
No problem.
I think there's lessons that you learn as a founder. There's lessons that you learn as an organization, right? Those are a little bit different, but I think as a founder, you always kind of like really hear that, you know, starting a company is kind of like stressful in one way or another, right? But I think it really took starting a company for me to realize just how much of starting a company, and a company to be successful is predicated upon your ability to wake up every day and be ready to kind of like smash a challenge, right? It gets really hard. I mean, it's kind of like always the roller coaster analogy is not an exaggeration. But as a founder, I have a lot of other friends that are founders and are doing similar things, and you start to see kind of like what makes the big difference there. And one of the biggest differences is like the joy of waking up one day and be like, yeah, today I may not win, but I'm just here for the fight, right?
Mm-hmm.
And a fight's kind of like an exaggeration, but just the sheer enjoyment of doing something hard for the sake of doing it has really been a big boon in being able to take on this journey. And that has been just a personal lesson as a founder, right? I think like as a company, another thing, like our software has extreme applicability outside of lending, right? And it is useful in any of these transactions, and it's useful not just like in larger banks, which is where we go for, right? We tend to go for this kind of like community bank that is starting at like the 5 billion in assets all the way to the mega bank, right?
Mm-hmm.
But our software is still useful in smaller institutions and all these other different kinds of like pools of the market that are not necessarily banks. And when we started this, we kind of like really were marketing to everyone. But I think like what we underestimated as an organization is just like how hard it is to properly craft a message and a reason and to package the product in a way that is useful and makes sense and is intuitive to the buyer on the other side. And so as part of what we did there, we actually had to kind of like focus and say, hey, we're just going to pick one of these like market pockets, and we're going to like very focus all of our energy in making these types of customers successful, and then moving on to other ones, right? And like from 6 months ago or from a year ago, that made no sense, because it's like, well, you have the software that is useful with 10 times more folks. Why are you not selling it to 10 times more folks? It's like, well, no, it's more than just that. It's like it's not about, is the software useful? It's like, can you deliver a happy customer journey from the very first time that they hear about you all the way until they are fully onboarded on the product? And like when you think of it that way, then it becomes a much tougher problem, right? And so just us as an organization have had to seek focus on that regard, and that has been a really powerful learning experience. I mean, I wish I would have like learned it beforehand, but having come from PitchIt, it's a consumer-facing company. It's a very different way of engaging with customers and software. Different lessons were learned there that don't apply here.
Best piece of advice thus far since launching?
Best piece of advice thus far. So I actually like some of the advice that I got was like advice that I got before starting a company, and that I learned while at PitchIt, right? Either I learned it just kind of like on my own the hard way, or like somebody gave it to me in the form of advice, as you said. And so I think a lot of the best advice, if you will, has been things that I've learned, or that we have learned really as a team, and how they are materializing nowadays, right? And so just from my time at Digit, I just had this feeling. Digit was a very employee-friendly culture, and it was a great place to work in. And I always had this like, and it was a very mission-oriented company, right? Like we were really trying to do things that were good for the world, just like how we're trying to do them at Able. And I just had this feeling from the whole time that the most important thing that you can have as a company is to have an exceptional team. And that having an exceptional team is going to require you to make investments, and it's going to require you to make choices that may not be the best for you as a founder sometimes, right? But they are the best for the team, and they are the best for those kind of like first 10, 20 people who start with you, right? And I just had this feeling that it is better to be one part of a bigger team that is going to be very highly qualified than otherwise, right? And so we made these decisions early on at Able just based on gut intuition, not really something that was verified, right? That we should pursue an approach that is very deliberate in finding the very best talent, and is going to be friendly towards acquiring that very best talent and keeping it highly motivated within the organization. And I think we're starting to see that pay off, right? And now that I have seen it work, I'm like, I just don't know how you can even start a company without having this, right? So I would say the number one piece of it's kind of like institutional knowledge that just adopted, and that now I'm seeing it in there, is like invest in your early employees, invest in your co-founders, invest in your people, right? And really try to make no compromise at finding the right person for the right job, even if it takes longer, even if it's more expensive, etc.
Speaking of the team, tell us a little bit more about those around you, co-founders, and who's on the team, how big it is, what does the team look like today?
Yeah, for sure. So our core team right now is about 20 different people, and there's like a number of I would call them like almost team members. So really, they are team members, but they're extended, and they're just kind of contractors that work with us in one way or another, right? And so if you add in the kind of like the contractor capacity, that group extends itself to like 32 people. But we started off like it started off with just kind of like myself and our investors at Human Capital originally, right? And the first person to come in, who's my co-founder, was Andrew, right? And so I had already worked with Andrew while I was at Digit, and Andrew has about as different a background from mine as you could imagine, right? We are just literally so different in many ways, right? But I always had like tremendous respect for his way of doing things and his way of thinking around a problem, and his own capabilities, right? And I have been always a proponent of diversity of thought and diversity of mind, and we shared many same values, so it was easy to kind of like make that transition in there. And I think like honestly, like you could have a podcast episode just on Andrew's background story, because it's just wild. It's an incredible background, much more incredible than mine is. But then after that, the first person to come join us was Justin. Justin was the designer at Facebook, who is friends with Andrew, right? And we had at the time as well like a great partner firm that we were working with, Peculiar, that kind of like helped start the technical side of the house along with Andrew. But Justin was our first full-time employee other than Andrew and myself, that came in and started building things. And for a while, it was just us two or us three. Like we even went down to like Wilmington, North Carolina. We were living together in like this house, it was like a little startup house down there, trying to like build this out. And then gradually, the next group of folks to join us in were people who we knew were very highly competent and very impressive in their own regard. So a close friend of mine, Publio, who was already running a very large operation shop at a different startup, came and joined us thereafter. And two folks who had formerly worked with us at Digit and were engineers there were the ones that came right after, right? And so the early days of like the company were formed with DNA of people who we already knew, how they worked, and who we already held tremendous respect for. And then, I would say it was only after that we started hiring folks that we didn't know and that we had to take a risk on, and I think those risks have actually panned out.
I saw that you guys raised some outside capital. How was the investment process? How was investor appetite for what you guys are building? And if a fellow founder picked up the episode, would there be any advice that you'd give them through that fundraising process that you might have learned?
Yeah, so we like our investment process has been very unorthodox, I would say. I think the typical investment process is you go, you make your deck, you go on the roadshow, you present to people, you get opinions, you get term sheets, you complete it, right? I pursued it in a very different way. I like doing business with very long-term relationships, right? So our first investors, like Human Capital, Barish there, I had known him for 5, actually 7 years before we kind of like did this. And I had been already speaking and collaborating with them in other capacities for years, right? So I knew Barish very well, and Barish was the person who just able to get kind of like started through a very systemic approach. So we started Able by just saying, hey, like what do we want in a great company, and then working back from there, right? And so that piece of investment was really kind of like a leap that the investors took on the founders, right? In this case, it was myself. But then the next piece of investment was a little bit interesting. So we identified that we didn't really know much about the commercial banking market, and we knew that this kind of like a software was needed in that market, and we knew there was that we could build it, but we understood banks to be notoriously hard to sell into, right? And so we kind of want to say, hey, like, who can actually help us with this very specific thing? And so we made a very deliberate effort to pursue a relationship with a very deliberate and very specific firm, which was Canopy Ventures. And so I had somebody who I had met in there from my time in Digit, and I started a conversation with them, and there was this kind of like 6-month period of courtship and like them helping us and helping us refine our thesis before any kind of like investment was made, right? And when they formed an investment, it was $1 million safe round. I remember that, which was woefully inadequate for a seed round for an enterprise side startup. But we just didn't care. All we wanted was them to be involved with us and to help us grow. And like they were the ones who brought us into Wilmington and into the offices of Live Oak Bank, which is partly where we got incubated. So that's kind of like where it went through. And I think after a while of working with both human capital and Canopy, the second investment just became kind of like a natural follow-on, right? We were prompted for it. We didn't have to do a roadshow, and it made a lot of sense at the time. So I would say that to any founder listening to this, right? I think that founders should be extremely deliberate about identifying who they want to work with and what is it that first identify what your company needs that it doesn't have, and then second, find the right people that have those things that you don't have yet and that you're going to need, right? And then target those people and fundraise only from those people, right? And especially in the early days, it may be better that if you can't fundraise for the people that can make a great team, you just don't start it. In the later days, you can't really afford that luxury, and like you may have a bigger vision, but in the early days, it is better to get all the right people on the table, I think, than to get the money on the table. And so I would always encourage founders to take a lower valuation or take longer time or whatever it is, if the cost of it is actually finding the right person to partner with. That's what I would say.
We have just a few minutes left, so I'd like to end a little bit lighter with a couple of fun questions. Do you have a favorite book and the last book that you read?
Certainly. So do I have a favorite book? No, I think picking a single favorite book would be one of the hardest things possible. But I do have a set of like, I think I read 3 genres. I read like a lot of kind of like self-help books, like, stuff like for founders and for sales folks that have been great. I read another category, and I'd like to talk about the other category because I'm sure it's talked less by other founders, which is that I do like to read nonfiction historical novels, stories about people or about accomplishments. And I think like one of the most impressive books that I have read in recent times has been The Making of the Atomic Bomb. And I'm trying to remember the Richard Rhodes, right? This was an epic book about how the Manhattan Project got started and the stories and the lives of all the scientists behind it. And I don't think there's a more inspiring and incredible engineering feat than what you will read in that book. And so right now I'm reading a different one, reading a book called The Power Broker. It is about this individual, Robert Moses, who is very famous in New York because he literally
right where I'm from. I mean, there's Robert
Exactly.
Moses Parkway, Robert Moses Beach. I mean, I live in Long Island, so Robert Moses is very close to Long Island.
Everywhere. Yeah. Yep. There you go. So I'm reading the 1974 biopic on him, which is also an absolutely incredible work of investigative journalism. And I don't think that book is exactly all roses and rainbows, but it is actually an impressive story to read and to learn about.
Every founder needs to step away, clear their head. What do you do to unwind?
What do I do to unwind? There hasn't been too much unwinding. So the first thing that I do is like naturally read before bed. I think like just disconnected completely from work. As a founder, you may be working outside hours. That's very important. The other thing is like physical fitness. I love doing some form of exercise or another. As of recent, I've been doing a lot of powerlifting, and that's been kind of like a very fun ride for me. I also do kind of like other, winter sports and the like. I think besides that, which is staying in shape, do a lot of exercise, get my energy out that way, and reading, there really isn't much. I like reading, and something about that is curious about myself. I don't think this is like the most common thing, right? But one of the things that most entertains me, and at the same time most keeps me in my zen, if you will, is just learning new things. So I try to learn new stuff that is completely orthogonal or different to what it is that I'm engaging with. And sometimes that is, hey, I pick up this project and I've learned woodworking. Sometimes it is, hey, I picked up this project and I'm now into powerlifting. And just learning new stuff is really what drives me and what keeps me sane in that regard.
Do you have a favorite sport or sports teams that you root for?
Oh man, so I'm really into college football. I'm not sure if it's my favorite sport to play.
As am I.
I like, yeah. So I I definitely would not want to, like, what I play and what I watch are completely different. But my two favorite sports to watch are college football and NBA basketball. And college football, I think I went to college during some golden years for Stanford. And it was absolutely incredible to watch it. Today, I still watch it, although I get disappointed a little more often than I should, and so I have to emotionally keep myself at bay from watching it. But NBA basketball is absolutely incredible. And then in terms of like sports for myself, just really like individual sports, swimming, skiing, powerlifting. All these different sports have the same thing, which is like I'm just competing with myself all of the time, and I really like that. I also like playing other sports like basketball for diversion, but not so much for getting competitive at them.
Do you have a favorite vacation spot?
Ooh, also tough. Yeah, I don't think. I think there is one which may be like a little interesting, but it's not where you would typically hear. I've traveled all around the world for pleasure, and it has been one of the most incredible things. But my parents still live in Mexico, and they have a little home like 2 and some change hours away from Mexico City, which is in a tiny town called Tequisquiapan. You would have never heard of that town otherwise, right? But
Definitely
going
not.
back to that town and spending a couple weeks there is actually like one of my favorite things to do.
And then final question as we end, biggest inspiration in life?
Oof, that is tough. There's so many. I'm really of the opinion that it takes a village, right? It takes a village to make somebody grow in something. So I think just picking one individual is not enough. But I can recall specific members of my families, obviously starting with my parents, but also my uncle and grandparents who had a tremendous impact there. But I mean, they're just the beginning of a long lineage of people that inspire me. Even today, like, my girlfriend's a source of inspiration. My best friends are a source of inspiration. It's hard to really identify one, but I tend to pick the right people to follow and just kind of like emulate their behaviors in a sponge like that. So it's worked out.
Well, Diego, I appreciate you taking a few minutes and chatting with me. If someone wanted to reach out, find Abel, find you, how can they do so? How can they reach out to you guys?
Yeah, for sure. So our domain is www.able.ai, and I would say that's kind of like the #1 place to visit us and find us. And if you are listening to this and you do want to reach out to me, you just need to put Diego at able.ai, and then you'll be able to find me. And I always respond. It takes me a long time, but I always respond.
All right. Well, thank you. Continued success to you and the team. Hopefully we'll get you back sometime in the future.
Yes, sir. Thank you, Todd. Thank you for hosting.
Thank you.